and this is what is known as a rip your face off rally. What's up, everybody? Welcome aboard to Bubba's Daily Update. And boy, they gave an old face ripper on Monday. Just a basic gapped higher. Looked like they were going to break down. It was interesting because first thing in the morning, it looked like they were going to break as the S&P went all the way up from up 38 points down to up only 1. And the NASDAQ actually went negative, and the Dow got to only up like 120 before just bolting higher. And of course, by the end of the day, you've got the Dow up around 600. NASDAQ up close to 200 and the S&P up over 50 points. What a rip your face off rally this was, and not a surprise. I don't think anybody should be shocked by this rally. Again, we had extremely oversold conditions coming into today. We had a market that got absolutely obliterated last week. This is what you expect. You know, everybody was expecting a replay of 1987 with the Black Friday into a Black Monday, and of course, that didn't happen. You had a market that got caught short, and of course, you couldn't get out. They kept reaching them up and reaching them up and reaching them up, and that's what happens when you get to extremely oversold conditions. Now, this bounce was obviously a little bit bigger than one would expect, but that's why they call it a rip your face off rally. You couldn't get out of the way, and that is something that we look for. But really, this again suggests the top of the market is in. We came down and made new lows. Now we're rallying up, and these are the rallies that you want to look to sell. And I think what you look for here is around 2650 to 2670 in the S&P. That's probably a pretty good level to go ahead and sell them. Again, this is the kind of market that you expect. This is high volatility. They crushed the VIX again after taking it way up. And again, that's no surprise. Again, these things happen when you get too carried away on one side. You're going to get a spring back. Think of it as a big rubber band that stretches back and forth. But we do see that the top of the market is in and that we're going to have an opportunity to sell. So now it's our job to take advantage of this opportunity to go ahead and sell into this market when we get the right levels. You got to be patient enough to wait for your opportunity, and that would be 2650 to 2670 in the S&P. We saw the bond markets very flat all day, on the plus and minus all day long. The euro currency took off the upside, punishing the dollar once again. And again, that's our key trigger. The dollar is what we're really watching, because I think the dollar is going to be what eventually will have us turn around and really get the crippling sell-off that we're going to eventually going to get from here. But in the meantime, you're trading these big wide ranges. Gold was up a little bit, but again, trying to get to that upper end of the range, I would expect gold to turn around and go test the bottom end of the range. But we could break out. We've got a major ratio split here. Gold is 82 times over silver, which is almost the highest that it's ever been. That's something to look at. I think that a good trade is short gold, long silver. I think that would work out pretty well. That's something that I would look at. But overall, you had a market that, again, ripped your face off. There's no other way to say it. All right. It was a bloody day if you were short. And of course, I was short, but I did get out. But it was a bloody day. And that's what you expect when you get this kind of movement. This was an inordinate day, but volume was not as heavy as one might expect, which is just another sign that the market tops may be in. When you look at the grain markets, grains were higher overnight, and by morning, wheat was down, corn and soybeans were still higher, and by the end of the day, they were all lower across the board. Not a real surprise. I expect them to trade in a range for the next few days. I still like it. I'm still a buyer, but I'm looking for some churning action here, which is why we sold some iron condors here, looking for it, though, eventually to break to the upside. After Friday's cattle on feed report, I would have thought we had a much bigger rally, but the cattle markets are really very quiet. Opened a little higher, really just churned, closed a little bit lower, but not enough of a range to really get excited one way or the other. We're still trying to be buyers, but again, it's not something that I would, jump in at the moment here. It's just really ugly. But again, I think what you're seeing here is that the sellers are running out of steam, and we should get at least a springback rally, if nothing else. Bitcoin was down on some rulings that they're going to stop advertising on Twitter. Now, the truth of the matter is, who buys their stocks or who buys their products off of advertising off of Twitter? So again, I think that is much overdone to the downside. I think the cryptos are a good spot to look into a buy here, and I think you want to look to be a buyer as we move forward. Again, look for good support levels. I think that you found Ethereum down at a good level. They all seem to be down at a fairly decent level, and someplace we'd want to step in and be a buyer. So the overall picture is simple: the rip your face off rally, followed by we'll see what happens tomorrow, and I would expect to see tomorrow. Hopefully they'll open higher so we can sell into them. If they open lower, there may be a little bit more room to the upside here. But in the meantime, this is all very significant to the top of the market. The pundits are talking about China and the trade wars, and that's why we got the rally. I'm just telling you that you could just see the action. It was a short covering rally. There was nothing really to get overly excited about. Markets are markets, and that's why you can't predict them. That's why you have to watch and read the market footprint as they come. Facebook is still under a lot of pressure, which indicates that there's more trouble in more of these NASDAQ stocks, although Apple was higher and Amazon was higher. But I wouldn't get too excited. Again, these are very good dead cat bounces of people chasing into the markets. That's it for today's Bubba's Daily Update. In the meantime, don't forget to check out high school investing website, highschoolinvesting.com. Check it out. See if you want to give a hand. We're looking for help at Patreon, patreon.com/Bubba Trading. Again, we're in 400 high schools now. We're trying to get into 40,000. So if you want to step in and help out a little bit, that would be great. If not, no worries. We're all good. In the meantime, don't forget to catch the Bubba Show every day from 4 to 5 Eastern Time at libertytalk.fm. We got a big guest coming on this week. We've got the starter of EOS cryptocurrency and BitShares, which is one that I own. So you might want to tune in on later in the week. And also, we've got Anthony Scaramucci coming up in a couple of weeks. So in the meantime, this is Bubba's Daily Update. We'll see you back here tomorrow. Same time, same station. Bubba's Daily Update. Have a great day, everybody. Thank you so much. We'll see you later.